Hi, my name is Bjorn Tremmerie. I'm responsible for technology fund investments at the European Investment Fund.
Bjorn, thank you for joining us here in the filming studio at SuperVenture 2025.
Yeah.
You've been to a few editions.
I think all of them.
All of them? Okay, there you go.
So.
We had someone here who's been to all but one, so you're the winner. You take the gold. Tell us, why do you come, and specifically for this year, what are you looking forward to get out of this week?
Well, first of all, at EIF, we're one of the largest investors in European venture, one of the largest backers of venture capital funds. And this SuperVenture is one of the prime opportunities to meet really all the managers in the ecosystem, all people that matter in European venture. And with one plane ticket to SuperVenture and to Berlin, you actually manage to, in a week's time, do half a year of work. Yeah. So in terms of monitoring, in terms of feeling what's happening in the market, feeling the pulse, the vibe, it's just a second to none opportunity.
Yeah. I cannot not ask this question, right? How are you feeling about macro? How are you feeling about our industry? What are you excited about? What do you worry?
Well, worry and fear is never a good counselor. And the good thing is that the maturity of European venture has also come to a stage that the managers are now not panicking anymore when something major happens. So that was different in 25 years ago. .com, we were clueless. We didn't know what was happening. We needed a Sequoia letter to help guide us as to what advice to be given to startups or to fund managers. Same still in 2008 when the global financial crisis hit us. We were still clueless. But in the meantime, we have founders and management teams of funds that know how to navigate these stormy waters. They've gone through a couple of crises, including the COVID, and they're all prepared and not panicking. And I think we're weathering the storm quite well. I don't feel panic here. I think they also see this as a moment of opportunity. Volatility is actually a moment where a lot of money can be made as well, and that's not only on the stock market but also here. And I feel actually quite a bit of comfort in the market. And yes, it's annoying that there's no exit, that there's no DPI, but this is not going to last for 5 or 6 years either. So there's always sunshine after the rain, and that's a bit the feeling. Business as usual. Okay, it's tough, but if it were too easy, it's not good either. There should be a little bit of a barrier to entry for an entrepreneur, for a fund manager. And actually, I think when it was too easy, like in 21, that is actually doing more damage. More damage than good for the industry. So what is coming ahead? I think opportunity, and for Europe as a continent, also the opportunity to show that we need to be autonomous, sovereign, and that we need to be able to stand on our own feet, not only on the geopolitical field, but also in terms of innovation and entrepreneurship.
So Bjorn, we yesterday you were on a panel with a good friend, shared friend of ours, and it's my understanding this is something you do actually recurrently. You go on this panel quite recurrently to discuss the state of venture and whatnot. If someone's watching or listening in and they couldn't join and they couldn't watch the session, give us the highlights. What did you guys talk about?
There were a variety of highlights. We discussed indeed what I just said, the outlook, the current geopolitical tension, and I think there was agreement with Joe and I that there's more opportunity than reason to worry. We discussed upon the absence of DPI, and that currently there are no exits and reflows, and for some of the investors it's a necessity to recommit to funds, and of course for fund managers or fund of fund managers that's a difficulty. But I also brought some data into the mix that currently, if you look at the best 50 DPI fund managers in my portfolio, the best one has a DPI of 13.4 and number 50 has a DPI of 1.7. And if I look at what the status of the DPI was in 2017 when I presented data for funds raised since 2007, so 10 years or more then, the highest one was 1.4 times DPI, and the lowest number 30, then I didn't even have a number 50, was 0.3. So 8 years ago, the DPI situation in Europe at the global scale of European venture was a lot worse than what is now. So it's just a moment in time, a snapshot in time.
Yeah.
I'm sure that in 1 or 2 years' time, there will be again exits and IPOs.
Yeah.
And if not, there will be also secondary opportunities. That was something that Joe brought to the stage as well, that there's a lot of secondary activity that's currently bringing some liquidity. We also talked about valuation, that they have come down, and I think that's a good thing, but that good companies still command a hefty valuation. But if it's a good company, then it's normal that you need to pay a good price for that as well. It's just you need to stay disciplined.
I think that's a really interesting, especially for people that didn't attend, really interesting insight there that you shared on the DPI side. Just to be clear, that's DPI, right? It's not TVPI.
No, it's not. It's not. That is the top 50 of all of our funds, and it's really close to 14 times to 1.7. That's the range.
It's great. It's great. It's great for Europe. I think as European supporters, we need to echo and we need to repeat that message. It's an important one. You spoke a tiny bit about sovereignty. Yeah. And I think this topic of defense tech is very much on the trend, right? Everyone's talking about it. It's a tough topic. If we're being serious about it, it's a tough area to invest in for a multitude of reasons, and this is maybe more of a personal Bjorn question than an EIF question. I'm not sure. You tell me, but
I'll specify if need
be. How do you think about this space, and how do you think about the topic as well, generally speaking? Because personally, just to give you my view, right, I believe we need European defense sovereignty. But I'm very, very unsure of what I would do as an investor. I'm very, I don't feel very confident. How do you see it?
The official line, personally, I would agree, and also on the record as EIF. Yeah. And again, when I say EIF, we're in a policy executioner, so we execute what our mandators and our policymakers instruct us to do. But there's a European awareness that we need to do more in that area, and doing more from a sovereignty and autonomy point of view doesn't mean that all of a sudden we're going to be investing in weapons or ammunition. So when we say about defense, it's just making certain that we're not sitting ducks, that we're not naive, that we have technology that allows us to be prepared against cyber attacks, that we can securely communicate, that our data cables are protected, that our energy infrastructure is protected, and you don't necessarily immediately need to invest in bombshells or bullets or what have you. When I listen to managers that are willing to engage in that sector as well, they don't necessarily say that those are the areas where the big opportunities are. So it's really about making certain that we have access to space out there, that we can launch satellites and have communication infrastructure. It's really about all those things. So we have a guideline now that we can invest in dual use technologies, applications that are suitable for both the civil and the military sector, as long as it's not a weapon and an ammunition. So that's to the area that we don't go, and we've signed up our first defense fund in that respect. So it was publicized as Keen Venture Partners, a Dutch pan-European manager. We put in some defense money there. It's also some space money in there. So it's areas that are overlapping. We already had some smaller tickets end of last year into pan-European funds that are not exclusively on defense, but are also doing a little bit of that. So, and when I say defense, it's really dual use. And there's a big awareness, and I think it's not only awareness, it's also a refusal of trying to be naive. Yes, the geopolitical tension shows that you don't need to be an aggressor when you're just willing to make certain that as a continent you can defend yourself against aggressiveness, and that's what we really do. And it's I would say with words is as simple as that. Luckily, the fact that we now have a defense equity facility, a fund of 175 million that will be invested, if not by the end of this year, early next year, that has also created a little bit of an attention in the market. Managers that had some skill sets already had some first attempts in that sector with a generalist fund. They're now thinking of building teams that can do defense only. And like I said, again, defense only. I don't think the market needs to think that we're all of a sudden investing in machine guns and what have you. That will not be the case.
And to be fair, right, going back to my original question, sovereignty is also about energy. It's also about also about communications, also about cyber. There's a bunch of other areas which EIF has heavily been involved historically and still.
I answered the question especially from because you insisted on the defense side, but also on the other element. Sovereignty is also, there's a whole other dimension of sovereignty that is very dear to our heart. If we don't develop it, and it's the later stage segment of Europe. So currently all our tech champions, so the real breakout scale-up companies, they cannot be where they are or compete globally without large-scale funding coming from outside of Europe. And why outside of Europe? Because European doesn't have the infrastructure yet. We don't have sufficient 1 billion euro funds that can lead 100 million plus round. We're working on changing that. So we have the European Tech Champions Initiative, which is bringing 1 billion euro funds to the market. Currently, we're happy that there's friendly non-European money still financing that, but we're at the risk that all of our tech champions at the end, if we don't build our own infrastructure, are completely reliant on non-European money. It's not that is necessarily a bad thing, but it's not helping on the autonomy, because if you're leading a late stage round, you also have your seat at the table of the board of these companies. You can help strategically drive. You can help them and find clients that might come out of Europe as opposed to the US, suppliers that come out of Europe as opposed to the US, and you actually can also try to keep them longer in Europe and create more employment here as well.
I like how you highlighted the tech sovereignty, right? And I think that's an important topic, of course, for our industry, right? But also for our continent.
And sorry to interject, but also Europe has historically been very good at the car industry, for instance. That may be under pressure by the bids and other EV players from China, but autonomous driving is going to be a big play. So I mentioned space as well. For autonomous driving, you need satellites in space. Currently, who can send satellites into space on a daily basis? There's one. It's SpaceX.
It's a very specific example.
Can you imagine that European car manufacturers, in order for autonomous driving, need to call their largest competitor to say, "Could you please send me a satellite into space?" It doesn't feel right. That's the type of tech sovereignty that we need to have, and that's just one dimension. There could be plenty of others where it's tech sovereignty in space, on climate. We just need to get better at that, and to get better, it's not the brains that are lacking here. We need the funding, and we need the institutions that provide the funding as well.
Okay, so I like to wrap this up with a small chat around learnings. You've been around for a while. You've seen our industry mature. You've seen our industry do mistakes as well. What would you say are your biggest learnings that you like to share with people listening in?
It's difficult to really apply learnings, but I think the learnings that we have is that it takes time to develop an ecosystem. I've been investing since '97 in one way or another in the European ecosystem, as a direct, as part of a balance sheet of a bank, and then as a fund of fund. So that's how recent our industry actually is. Sequoia was started in '72, if I'm not mistaken. So they have double the lifespan. And sometimes you just need to, fall on your face, stand up, and learn. There's people that say we'll help you avoid the mistakes, but sometimes you need to make the mistakes yourself. So is it a mistake to grow up? I don't know. I just call that growing up, and now our ecosystem is mature. What we didn't have enough in the past, but it's not a mistake, we just didn't have it, was enough fund managers that also understand what it takes to build a billion-dollar company. Now we have many fund managers that also have operators on board. Silicon Valley, most of the fund managers there are actually people that have grown a business themselves. Andreessen Horowitz is one of the prime example. Now we have that too in Europe, and is that a mistake? I don't know. You just needed to allow time. I do think as well that we need to. The mistake is that it's not a mistake. We are not good enough yet at convincing institutional money that European venture is worth the effort. But is that a mistake? No, it's going to take time. And I do think that we do make the mistakes as Europe. As the one mistake that also at our level, the policymaker level, is that we're not unified enough. It's 27 member states, and we're not speaking enough with one voice. That's something I would hope that not only as policymakers but also as a continent, we sometimes were to carry the European flag with a bit more pride. It was set up as a peace project. It may become relevant again, but that's more a philosophical debate than a venture capital debate. I do think that what I said on stage there as well is that I do believe that in the next 10 years we will see a $1 trillion company coming out of Europe, if we allow ourselves to make sometimes mistakes as well. I
think the beauty of our industry is that VCs are mostly stewards of capital, but I think that comes with honestly, I think that comes with some level of responsibility.
Oh, it does.
And I think you said it's a bit of a philosophical question, but I do think it's a type of questions we should ask ourselves at events like this, SuperVenture, but also on a daily basis. And I think that's really challenging. And I think we talked about defense tech, right? It raises a new set of dilemmas that founders face, and we should talk about it, right? We need to think about that, and it's our responsibility as an industry. So I think it's very, very. Thank you for sharing that, because I think it's very, very important, and it feels philosophical, but I think it's very, very important.
It is, and I just want to make one absolute clear statement as well. When we talk about tech sovereignty and autonomy, it is never in a closed environment. It's just to make certain that we have our own. So it's not against foreign money that would come here. That's a very powerful thing as well. It's good that there's foreign money wanting to invest here, because it shows and it corroborates the case that there's good stuff being developed here, good companies. It's just we cannot only be relying on that. So I want to keep the hopefully not naive dimension of being an open economy as well, but not too naive either when it comes to autonomy and sovereignty. An
open forum for dialogue. Let's leave it at that. Bjorn, thank you for joining us.
Hopefully
next year we can meet again, either here or at the event somewhere.
I'll be here. It's to finish off. It's the event. If there's one event I mark in my agenda, it's this one.
Awesome.
Great job.
Thank you.